right, hello everyone, and welcome to another live event here for Pepperstone. It's great to have you here. It's just past the 20th of January, and obviously volatility is already starting. So, as always, today we'll be going through so many topics: support, resistance, MACD, indicators of when to find trend, what we've been seeing recently, and we'll be breaking down the live market with some of the most important reads that we've seen right now. One of those is on the screen right now, which is the US dollar and, of course, the euro US dollar, which we've discussed in recent topics. My name's Thomas Atkinson. As always, I'm joined by Tyrone Abella. Tyrone, a lot of vol over the last couple of days, but of course, this is what traders love. So get ready for a big 2025, hey?
Absolutely, and we've been waiting for it. Welcome, everybody. Yeah, look, we've got the new presidency, we've got earnings season, we've got all sorts of things happening. We had the inflation data last week. There's a lot going on at the moment, and the markets are starting to tell the tale. It's actually, look, we're looking fairly strong in a couple of the indices, actually, and we're not really surprised to see this dollar index start to struggle a little bit. But I think that, there's support here. It's a bit of a you wouldn't want to go any further, let's just say that. It wouldn't want to go any lower than that sort of one. Well, effectively for me, I mean, that 107.80 is probably the line in the sand. If we get past there with a daily close, I think it could be in a little bit of trouble all the way back down to 106. So definitely a line in the sand moment for it. It's a role reversal zone, no question about that. We talk about this all the time. But look, it's broken a 20 moving average and quite significantly too. So it's the first time it's broken that in a very, very long time. So that has to be respected as well. But it is a bit of a do or die level for it, no doubt.
Yeah, so let's break down this dollar even more than you just said. So basically, we've got here the level of demand or support, as people would see it. So in today's session, we'll be talking about support, resistance, a little bit of supply, demand, and bringing it all together into the live charts. And as always, by the way, guys, if you have questions live, please feel free to ask them. We'll answer them throughout. Hello, Stuart. Hello, Silvio, and everyone else that's joining us. So we've gone down to this level of support, and you can see here that it's gone from a series of higher highs to potentially a lower low coming through. And as Tyrone mentioned, this is a big level of demand that we want to, or support that we want to be focusing on, because it has closed below for the first time the 20 moving average. Now, this is the 20 MA, so effectively probably the most well-known indicator on the markets. I would say one of the better ones as well. And usually we use the 20, the 50, and the 200, okay? Now, this is not actually the 200. This is an anchored VWAP from leftover from last week. But the point is that they're the main ones we use, the 20, the 50, and the 200 in terms of moving averages. So because it's closed down and because it's the US dollar, we have to ask ourselves the question of, has something changed? And as you'll always be looking at, you'll be watching the euro. And Ty, we did caution, we actually talked about this last week. We mentioned the 20 moving average. And this is the beautiful thing about doing these here every week with you guys. We'd love you to subscribe, by the way. Make sure to do so in the description down below and come and join us live so you can ask questions and get some great information for 2025. But this is a classic case of two tails and who was going to be stronger. And I actually looked at sentiment, because something that we mention a lot to everyone is that sentiment matters, guys. Of course it does. When we're looking at, is everyone piling in one direction, and then the price action's giving us, two different ways, and we're getting confused, then you've really got to start pumping the brakes and saying, wait a second, what is going on here? So we saw a very important pattern that you mentioned, Ty. Do you want to explain this pattern to everyone, just so we're aware of what it means and how powerful these are? These are statistically relevant, aren't they?
Absolutely. Look, this is a morning star, and I think that the fact of a morning star on a daily chart on a significant instrument like the Euro USD is a big deal in itself, because it doesn't happen very often. Like you can see engulfing candles and a lot of the popular patterns that happen quite often, but this is actually a very significant pattern. But I think what made this more significant, Tom, was the fact that it was actually at a very, very heavy level of support, and when the pattern is coupled with a very strong support or resistance zone and a round number like we can isolate there are many, many reasons why this could have potentially rebounded from that point, even without the Morningstar. And the Morningstar 3 pattern, you got to remember, this is a daily chart. So this has taken 3 days to actually form this pattern at a level of support. So it made it very, very significant. And it did the job. And look, it's one of those ones where they're rare. And when they're there at a place of very, very important support, and inversely resistance if it was an evening star, which is what it was on the dollar index, then you're getting a very, very interesting level to trade off from. And I know a lot of people got this trade because you can break it down to the smaller time frames, and there'll be half a dozen entries that you could have taken from all the things we talk about every week. Pullbacks to the 20 moving average on a smaller time frame, all sorts of reasons to actually get in on this trade. But once it broke that 20 moving average, it was on for young and old, and good to see. It was actually good to see because volatility returned to one of the most important currencies on the market, of course, being the euro. So it was actually good to see some good volatility play out there.
Well, let's talk about the importance here. 20 moving average, obviously a long leg doji, a rejection style candle that's going to have a lot of people shorting. We often say it's important to follow the storyline of the candles, and I think that's probably the beginning of really getting better at trading and investing. And that is that you have to think of the candles or as of any of charts as the psychology of the market. What's the story that's being told, and what would you have done when you first started trading and investing, and what might you be doing now? A really important learning curve. I think my ruling of 2025, at least in the way I'm looking at it, is that no emotion is the key to 2025. In a world of no doubt huge amounts of information, no emotion is going to be the key. So, Ty, we break through the 20, we get above these 2-week rejections. There's going to be shorts here. Effectively, they're going to be squeezed, and we know where their stop losses are going to be. They're going to be above these 2 levels here. So here, there would have been a bit of a squeeze. That's why you get that fast move. You've seen a rejection down, a very strong candle back up. That's a strong candle, isn't it? That's showing us that the buyers are fairly committed. They are on the index as well, which you'll see in a moment.
Yep.
And then we're now plowing into this strong resistance. So what does it mean? I mean, if we get past this point, we're effectively making a higher high, aren't we? And we're changing trend.
Yeah, most definitely. And look, we've already, that pattern was the start of effectively a reversal in trend. We have got a lightning bolt, higher high, higher low sequence now on a daily chart, which is actually quite significant when you're trading something as strong as the euro, especially at a level of very strong support. Let's remember, this has come from a very, very high level. This has been selling off for quite some time. So it's a significant reversal. There's no question about that. And to me, I just think it looks hot. I know there is a bit of resistance where it is right now. But from a trading standpoint, I think the momentum is all long on the euro, and I wouldn't be shorting it with my worst enemy's money right now.
No, I don't think going against the euro right now would be the best play. Yes, we're at resistance, but we can see that this storyline could be really squeezy. And as Ty mentioned, if you do accidentally get caught in the shorts, the next moves could be easily 105, even upwards of this level up here, 106. And these can happen very quickly. Aggressive action. And this was not the only break that we saw of the massive breaks that we kind of saw as well over the last couple of days. Let's keep breaking down some charts. Of course, that's 2 currencies. Let's move over to some indices here, and we'll do these fairly quickly. The US 500, obviously big movement up. Now, we suspected that CPI was going to be the linchpin here. CPI pushed above that 59.30. And the rest is history. Of course, we've moved very strong. And you can see that 59.30 was the correct level because we got a little bit of action around here, rejected this initially, rallied through, and now I would call that a squeeze. We've got actually monumental history here. I want to tell everyone something because most people probably don't care, but I care. And that is that we have never seen breadth thrust like this. This is 6 days in a row of 68% plus of the index going up. That is 2/3 of the S&P 500 have actually increased for 6 days in a row. Now, that since 1920s has never actually occurred before. We've seen 5 days several times. We've never actually seen a 6th. So there we go. We witnessed history. Well, and what does that mean? Well, basically just means that the market is buying a broad spread of stocks. So breadth, basically, it just means lots of stocks are going up, not just maybe NVIDIA or something like that.
and that's how the sentiment is strong. Sentiment is quite strong across the board. And I think that, for a healthy market's going to go up with big breadth of buying. It's not going to go up because a handful of stocks that are actually doing really, really well. So, that coupled with some really good earnings results out of the banks and things like that, it's really pointing to a very happy American market right now. Like everyone's cheering. We got Trump back in. He's there. We know that the market loves Donald Trump. and Donald Trump loves the market. So he hasn't surprised anybody with his policies, because obviously we were well aware of what he was planning on doing as soon as he got in. So really, the market's not going to be reacting that heavily to him just being in, but it's already happy that he's done it. But it's really, the story is earnings, right? I mean, at the end of the day, inflation data is good, earnings is good, and that's what the market wants. And what, in our opinion, a healthy market needs a big, broad range of stocks to be going up in sync. And we've seen it all before, right? Like you have Nvidia or Apple shooting the lights out, nothing else is going up, and the market can come back down just as quickly. But when there's so many stocks going up, sentiment is very, very strong amongst traders and investors alike. It's a very, very good sign. It's hard to see this market not making new all-time highs, really. I know it's not that far. It's not a great call, massive call. But, hey, we were calling this last week. All we wanted was a break of 59.30. But it is difficult to see it not breaking past to an all-time high and getting past 6,100.
So let's bring down some extra resistance support concepts. First up, we broke this high. That's obviously a significant to the massive change of trend. We also broke the 59.30, which is one of the big things here. And I guess the concept here is earnings. I think when you're talking about what is the market happy about, or what is the market really doing well about, it's just the earnings. The earnings are really great, and obviously the expectation is that if you're talking about Trump, it's going to be deregulation and company tax cuts. Now there's a comment in here just saying we just saw one of the consolidation pullback into this event. Yeah, it was probably due. You've got to remember the markets do this. They trap it. I probably sell the rumor, buy the fact is the way that we're looking at it. So trend line down, breach this resistance, obviously change trend to a higher high. That's good. And now let's have a look at MACD. So what we'll do is we'll load up here MT4 MAC. Oh, we don't want to do that. We'll load up an indicator. And we'll load MT4 MACD, which is one of our favorites in terms of putting on the charts. What you'll notice is the MACD just turned positive again. And when you start looking at the major higher timeframes, it never really went down enough to actually convert something like a weekly MACD. So the daily MACD just went up. We just literally saw a switch from down, that is a downward sloping MACD, technically more of a negative trend, to an upward side momentum. So type MACD can be used with divergence. MACD can also be used with just a momentum sign, which basically just says, things are good, because in essence, it's, basically signal lines as moving averages, really.
Absolutely. Exactly. Well, we talk about the 20 and the 50 being the all-important cross, but the MACD is a lot faster cross. It's using a 12 and it's basically using a 12 and 26 moving average, which is a lot faster, obviously, than a 20 and a 50. So every time that MACD histogram switches from below zero to above zero, you're seeing a cross on two very fast moving averages. So really, in a way, look, it is a lagging indicator, but it's also a momentum indicator. I like MACD because it actually gives you a few different reasons to, you got divergence, of course, but it is a momentum indicator as well, because in order for a histogram to switch, there has to be a cross. And that cross is happening with a 12 and a 26 moving average, which, like I said, are faster and admittedly can give you a false signal or two because they are a little bit faster. But when they're actually switching in the direction of a very powerful trend, they're usually a pretty good sign that market's going to continue.
Yeah, and this is going in the direction of what we've already seen, which has been a general bull cycle that in many ways is probably expected to continue through till probably somewhere around maybe the end of this year or maybe next year. There's a lot of debt financing and concerns there. But from the TA perspective, this is a momentum sign. And I zoomed it out then just to show you that whenever it's actually been this kind of thrust, that is a fairly fast move, if you actually go back through history, it's not really been wrong about these a further action on the upside to come. So you'll see here the breaks have been going through. So in the direction of trend, being up, very, very good. Nice break there. Let's break down the 2000, because, of course, if you have the S&P 500 coming, that's one sign. That's good. But what about the price action from the 2000 stocks? Well, again, resistance being broken through. The lightning bolt, as you call it, Ty, or change of trend here, coming through and breaking through some major moving averages. Also about to see daily MACD shift. So this is, again, another bullish sign. And I'll just take it one step further because, of course, 2000 stocks, well, that's cool and all. But let's actually have a look at one of the underbellies. Ty mentioned before good earnings out of the banks. Well, this is KRE, regional banks. And you'll notice here again, higher high, resistance broken, change of trend, MACD about to go positive. Not exactly what I would say you usually see in a bear market trend. I mean, of course, it's always possible it sells off a few points, but generally, this is kind of showing us that we probably have placed the lot for now.
Yeah, 100%. I think that the Russell, to me, actually looks even a little bit more value filled than the S&P 500 itself, because it's got quite a distance to travel before it reaches an all-time high, and really is playing catch-up. So it doesn't mean that it's not going to break to an all-time high, but if the S&P does, you wouldn't think that the Russell would be far behind it. And yeah, you've effectively got a couple of 100 points. Well, you've got 150 points there as a before you even reach the all-time high. So from a percentage standpoint, it's not too bad, right? That's you're talking about several percent there, lagging behind what the world is following. I mean, look, if the S&P breaks to an all-time high, really high possibility that the Russell is going to do the same. So to me, it's probably the more value proposition to actually get a better chunk of the action. It's above the moving averages. You're right. The MACD is all but about to switch, which is a really good sign. I like it. It's good.
Yep, I think good shift here towards the upside, and obviously another one of those momentum indicators. So MACD coming in kind of clutch there with two moves. I also wanted to just show you whether there was a version of kind of like a 4-hour or something in terms of divergence. You did see divergence. So this is another way of using MACD. We made a lower low. So this is a low. This is a lower low. And you'll notice that the histogram of the MACD was less over here, kind of showing you that maybe the trend to the downside was slowing. And as that breaks to this upside here, and we see this movement through, especially this high, kind of saying, you know what, it's probably a false move to the downside. We tricked you. We're moving the other direction. Remember, it's no emotion. Really, it's just about what's the storyline on top of the chart. So MACD can be used in two ways: seeing new trends and saying, okay, well, this could have legs. And then, of course, on top of that, saying, well, do we have some form of divergence similar to this type of thing here, the divergence between them? So we like using divergence as well, Ty, don't we? Just say, you know what, new high made, but not very strong. New low made, but not very strong. Always good to look.
Absolutely. Yep. No, it makes a lot of sense.
All right, well, let's keep going through some other things that have happened. So obviously the dollar down is a possibility here. It's going on to support. We've seen generally the S&P, the NASDAQ. I'll just show you everyone the NASDAQ so you can see the trend line action and the break again of a new high. So this is broken through here. Again, very good trend. Trend line here being the key, I believe, to really seeing significant strength. And I'll just show you it's a pretty easy trend line to see. Rejection down. A lot of people trying to go short here, no doubt. Pushes against the short, off to the races. And in options, there's actually positive gamma here as well, which basically just means people are piling on calls. Again, doesn't have to keep going up or anything. It can still sell off and come back down, but generally the trend is bullish when you see these types of things. PA base. All right, let's talk about some other breakouts. Gold, another resistance broken. So this is the resistance 27.20 to 27.30. We've talked about it a little bit. We saw a little selling, then boom, gold off. Oh yeah, new all-time high coming for gold. You guys know we've been doing this for a long time, and I feel like the last year and a half I've only just mentioned bull and gold. But the reason why is because it's one of those unique times for this metal. It's a unique time in monetary policy. It's a unique time in politics. It's a unique time in geopolitical stuff. And this is why we look at gold. But the TA is there. This is a fully fledged pullback in time. It's basically done nothing since October. So if it does break to the upside, can that give us extra strength, Ty, when we've got this channel or accumulation? Can that mean that it's about to get really crazy with gold?
It's hard to see it not reaching an all-time high. And I think gold, in my mind, is in the same basket as Bitcoin a little bit. When an all-time high is reached, it generally pushes a bit further than people would actually expect. Like I know a lot of the time you're expecting it to reach to an all-time high. It might go, $10 or $20 above it and then reverse. Gold is a little bit like Bitcoin. Yeah, when it goes properly. And it wouldn't surprise me at all to it see it blast $100 or even $200 past its all-time high and actually reach that fabled 3,000 that you've been calling for the last 18 months. I think this might be your time to shine, Tom. I think that you've been calling 3,000 on gold for quite some time now, and you could really see it happening.
Beautiful.
You could see it happening I think you could see it happening fairly soon.
Yeah, I think that the times are right. Look, you could even go higher based on some of the metrics I'm looking at. If the dollar truly does find weakness here and that euro is already, because effectively this is what we see within the dollar index, by the way, guys. The dollar index is telling us, okay, yeah, we've broken the 20. It looks kind of short, but at the same time, it's on support, as Ty mentioned. The euro is kind of already saying, you know what, things are looking really bad for the dollar. The euro is looking good. And that's probably counter to the news. So you're hearing tariffs, you're hearing Silvio. You've seen like so many people say, oh, tariffs are going to cause the dollar to go up. Well, we already saw that in what we call a buy the rumor. So this is why we look at price action. We don't pay attention to the narratives too much because the price action will always tell you what the real money is doing. So in this case, gold, just wanted to show you on the weekly, again, just as a MACD, we actually got a shift kind of when I went super uber bullish on gold, which was a positive MACD shift back here in October of 23. That's not the reason why, but I'm just saying, look at that. It's been consistent since then at a green MACD. And there have been a lot of shifts on the weekly here, but most of them have been sustained. So again, it's important that this continues up and continues to hold that. Notice also the weekly 20 moving average, another one we mentioned before. This is called mean reversion generally. And that has been a consistent moving average. So again, important that gold held that and it's moving up. So good signs there. Silver kind of similar, weaker, always has been. And silver looking to break that 31.15 that we've discussed for quite a few weeks. Silvio says here, so Tom, you've been saying that 3K for a long time. Yeah, I mean, look, it's a mixture of macro, mixture of all sorts of TA as well. Michelle says, do you think it will come back to the 20 weekly moving average? I kind of would hope it wouldn't. So this is gold. The reason you don't want it to come back again is you've got to say, well, wait a second. It's already done something a little bit weak. It came up, it hit the 20, it didn't make a higher high. Not the best yet, came back down, tested again. Lucky get some wicks. We need a higher high before it comes back to the 20. If it comes back to the 20 now, it's not good.
If it comes back down to the 20 now, I'm not so sure it's going to make an all-time high, actually.
That would be bad.
It wouldn't be good. It needs momentum. No, it needs momentum now. This needs to continue. If it weakens from here, it could be in a little bit of trouble. I wouldn't want to see that.
Yeah, that would be like saying you could have like a Wyckoff style moment. Actually, let's use support resistance like Wyckoff and actually look at Bitcoin here for a moment. So Bitcoin in the news, a lot of current cryptos in the news, of course, recently. And this is something that people have asked me, which is this in a crypto distribution? Is the trend over and this is all just the last hoo-ha? Look, we don't know that yet, but I think when we were discussing this, and it seems like an eon ago, but this was literally just last week. We were talking about how we thought the low was probably in for Bitcoin because of the steals and because of the mass fear that was hitting that market. Then it went to, of course, hysteria, which was around up here, when we hit that 108, 109 kind of area. And then we've seen this really large rejection. Now, you never really want to see these. That means that the price is not firm. So you can see here this large rejection candle. And it has a lot of people saying, well, is this like a BC, a buying climax, a UT and a UTAD in Wyckoff? And basically what that is think of it as markets will generally, if they've got to sell a lot of units, they'll sell it over time. And Wyckoff said it's important for us to understand if a large trader is trying to sell into us and the traps that they may set. And a lot of those traps are just slightly higher highs that get everybody excited to buy in, and then all of a sudden they reject back down. So the importance of this is going to be, how do we hold that kind of 100,000 level? Are we able to hold bullish buyers above that? If we are, good signs. Right now, of course, I wouldn't be bearish on Bitcoin at all because the trend is up, and I think it's an important handle. But yeah, it's something that a lot of people have been worried about, and I'm sure there's a lot of shorters here. Now, why that's important is because if we do go higher, squeeze. There's going to be a lot of shorters that are trying to press this one down at this stage. Your thoughts, Ty?
Yeah, look, I'm impressed actually that it's taken you till the 22nd of January to mention Wyckoff in 2025. That's actually the first time you've mentioned it this year, Tom.
Mm.
And
Haven't
that's not
seen
too
enough
bad.
Wyckoff,
I
that's why.
thought I thought we might have actually seen. I thought we might have gone a whole month without it, but no. But you know what? Look, it's relevant there, and it's important. I think that you're right though. It needs to really consolidate this base above 100,000. I wouldn't, I wouldn't discount it getting lower, but I would like to think that it will be able to hold itself up above 100,000 and potentially push to new highs from here. Consolidation is its friend. I think if you're a Bitcoin investor or trader, I don't think that you're going to feel pain if it does hover around 100,000. I think it's actually a good thing for this instrument. I wouldn't want to really no look. No one wants to see a flash crash on it now. It needs to prove itself as something that can be relied upon. And look, there are no secrets to the fact that one of the biggest beneficiaries of the Trump administration was cryptocurrencies and how they felt about the policy around it. So there's no real reason for it to be actually getting belted at this point. I think consolidation is probably key, and it's doing that. It's doing a reasonable job. And if it can hover around 100,000 for a little bit longer and continue to creep higher, I think that will be good for the instrument in the longer term for sure.
We'll just have a quick check of the MACD again. Weekly being the bigger conversion, especially the bull side. You can see here a nice MACD conversion bull 20th of March. I'm sure a lot of people would like to have bought some old Bitcoin back then and then ridden this positivity sign. So again, no stops all the way through this bull cycle so far in Bitcoin side. All right, so from cryptocurrencies, let's go back over to, did we mention oil yet? I don't think so.
Not yet.
So this was one that last week we thought was topping out. And I guess it just shows you that TA can work pretty well from this process. Very key resistance, pushes slightly above it, which is that classic. We, of course, weren't bullish on oil here. We were thinking down consolidation. I think there's even a possibility now into this demand or support. So this is a good level to be looking if you're a trader or an investor to be going that 73, 50, 74 range. Obviously, also where it is right now is the daily 20, which Ty's going to tell you is pretty damn good. So this is also role reversal, resistances becoming support. So we kind of like both where it is right now and could see reasons for it to buy. And if it goes lower, I think it's a great chance that 73, 50, 74 will hold. Your thoughts, Ty?
Yep. Look, I think it hit its target really nicely, and I think it goes unnoticed a little bit. That's actually it is a bit of a flag. Where you've got your arrow is actually a little bit of a flag, and that flagpole was replicated with the
Right, we did that
the
together.
move up. Yeah, the move up, and it also it proofed itself to a point of resistance. So when you get overlap of proofing, it's one of our favorite things. So what we're trying to say is you would have been mad not to be taking profit at that point. And a pullback is healthy, and the 20 moving average is exactly where we want it, of course. I would be happier if it actually hovered around here for a little bit longer and let the 20 moving average catch up properly and give it proper support. But it's probably, I would say, close to a 50% fib, maybe somewhere between the 50% and 38% fib where it is now of that swing, probably 50. So it's another overlap of potential support right through that level. So I don't think it's all over for oil. And we know our new president in the US likes oil, and he's certainly banking on it. I don't know if that's actually going to help the price, but I don't think.
I think. Oh, just on that, because of course the topic is drill, baby, drill, and therefore everyone's going to go drill and oil's going to be cheap. That's only if the companies want to do that. I mean, I think they also want to protect their own prices. So I think the narrative is drill, baby, drill. But as we can see here, the market has been doing totally opposite to what people think. And again, this is because there are always counters. What's the real truth? The price action showing us, and the price action saying, you know what, for now, oil is actually trying to break out to the upside. So I'd be still more bullish than bearish.
Yeah, I think that I think there's a very strong support level here coming up for it at around that sort of 75, 80 to 76. I think that's like I say, if we can bounce from there, it's a good chance it's going to break that 80, 50 this time and probably push on to maybe 80. I think 84, 50 is very, very likely. If we get a break above this new high that just got formed there around that sort of 81, if we get a daily close above that 81, I think it's a really, really good show for about an 84.50 move after that.
Mm-hmm. Okay, good stuff. Let's now go over to hot topic at the moment, which is Apple. And Yeah, old Pelosi getting in a bit of a trade here. I just saw her disclosures this morning showing that she sold some Apple up here. She's a good trader, I'll tell you what. But let's bring it back down to whether Pelosi might buy again. Let's have a look if she likes to get in and get out, make some taxation money. So what have we got here? And that is Apple coming down to a key level support.
Doesn't pay tax.
Well, you might pay tax when you make CGT gains. You know, I'm sure there's some CGT.
I'm pretty sure she's been pardoned for any tax evasion.
The CGT tax gains are good. I tell you what, I posted something a little while ago, and there were some epic gains. Some of these guys were making like 150% or something like that in a year. Pretty good. All right, so let's have a look at Apple here. Let's see if this is a contender of the support. So I think there are some good signs here, and I've written first buy area because when you're thinking about it from a let's say a MACD perspective into a support resistance perspective, do we have positive MACD? Well, yes, the histogram switched from negative to positive. It's still, it's been weakening, of course. I wouldn't expect it not to when it comes down like this, but it's still in an upward trend. We're still getting, of course, a series of higher highs and higher lows for now. And I think that's the essence of this. This is support. In essence, this is a level where we've previously seen buying. And what I did was I highlighted this range here for everybody, which is the most traded Wall Street range. Okay. We know it's Wall Street and because they're the biggest players. So ultimately we can just pile them together like Wyckoff did. Second mention, Wyckoff for Ty. This level here is the most traded. So look, most traded range, good support level, close to that 50. Obviously that would be still within this whole level. What you're looking for here is our old adage of patience, react, don't predict. So what are we doing? We're saying, okay, we like this level. We're interested as day traders. We're interested as swing traders. We're interested as investors. But we want to see a reaction. We want Wall Street and possibly to buy some up. And we saw a little bit of wick action, which is good. But yeah, Ty, consolidation here, bit of buying, that would be nice, wouldn't it, on the smaller time frames?
I think it needs to, because if it doesn't, I think there's probably another 10% down on it. I think that next stop is 200 if this level doesn't hold. So, and it's a very strong level, though. It's a very, very strong level. I'd be quite surprised, actually, if it doesn't hold. And I'd be fully expecting that it probably will because there's really, really good price action here. But I tell you what, you wouldn't want a day candle closing under 220. Or Nancy might be buying it. She might be doubling down at 200.
It is possible, but doubling down, she doesn't lose it. She did that on Palo Alto and made some good money.
There's not a lot between 218 and $200. You can see there's not a lot of stopping power there. So
200, the role reversal again, resistance becomes support, key level previously. I like this zone though. I think a lot of people probably ignore this area because they think, oh well, what about down here or what about 200? But I'm telling you, that is the number one traded area. So we would generally expect a reaction around here. And that's what you're doing as a day trader or scalper or anything. You're just finding areas of interest. If you see the reaction you expect to happen in that particular way, then you can say, looks like they're on our side. Guys, it is such an important concept. Don't just guess areas. Find areas of interest, see reaction, say, yes, I'm going with you now. And it is just game changing. It's in our courses, www.fxevolution.com if you're interested. And we talk about this quite a lot because, it's game changing. I'm telling you, it's game changing to your mental state when it comes to markets. You must have great temperament. It's a big deal. All right.
Absolutely.
We've seen here a stock that's come down. But what about this? You mentioned earnings season before, Ty. We're in the middle of stock earnings season. So we've seen some banks come out. We just saw Netflix come out. Netflix just smashed it away. Does anyone remember cable networks? It's just the same thing. They've done it to us again. They're upping the prices again, and I'm flabbergasted to see that it's the same. So they've said, you know what, we're going to put the prices up. You have to buy our network now, and effectively Netflix is now Foxtel in Australia or something like that. This is pretty funny.
And pretty incredible, really.
Consumer.
Yeah. What choice do we have, Tom? What choice do we have?
That's the problem. That's the problem. They know they've got you now. There's 5 streaming services, and each one of them is basically a cable TV. You put it all together, it costs more than the old cable networks.
Yeah, absolutely, it does.
And it's on demand.
And where else are you going to watch Tyson and Jake Paul fight if you haven't got a Netflix subscription? Like, where else are you going to do it?
I don't know if I want to watch that.
that actually warranted. I think that warranted cancelling your Netflix subscription actually. But obviously,
especially after
it did pretty well. It was obviously very, very good for them. But look, no, you're right.
Yeah.
I think people have been, like any good company, brainwashed into thinking that they must have that. And for all of you who have got kids, which I'm sure many of you do, if they're used to watching a TV show, you just go and take it away from them, and you want to see a tantrum. So unfortunately, we do kind of get locked in a little bit. And you're right, up go the prices, and they've got us, and that's why they're such a good company.
Yeah, there it is, guys. So big moat. They've got Tyrone. He's not. They've probably got me now as well. You can't get out of them. So 14.6% up. Obviously, this is going in line with those earnings season coming out. And this plus that big $500 billion announcement into the chips, which is Oracle and a few others. If you're not aware of that, you should look at that if you're a stock trader. But basically speaking, we're seeing this kind of bullish pump across the board of potential, I guess, money to be distributed between all of these big businesses. I mean, 500 billion total is no joke. So this is a pretty interesting initiative. So again, trends are key, earnings is key, and sentiment is key. So we went from negative sentiment to positive sentiment. You can see that in the VIX. There's the negativity, 20 plus. Suddenly we're down in 14s. When you get back in the 12s and 10s, you can start saying, well, maybe I need a little bit scared. That's a thing you'd probably be wanting to look at 2025. And you'll notice here again, it's kind of like the principles of support resistance. Down here, calm market. Up here, freaking out market. Up here, potential flash crash. You've got to then analyze accordingly. So again, support resistance helping out in that case. Guys, it's that point in time where we always ask the audience here that's live, do you have something you want us to analyze on the charts? Please put it in the comments. If you have a question, let us know as well, and we'll answer that through. While we're waiting for those questions and answers, let's take a look at another position though. I'm thinking I kind of want to go with, I guess, another crypto, just because a lot of people have been looking at cryptos. We'll go with Ethereum, because Ethereum is probably the one that most people have the most concerns about due to it being such a big crypto but not really running. And I'm going to apply some similar concepts that we've used today. First up, trend line. You can see here it's in a downward trend line currently, but it has experienced this big wick. We've also seen a decent amount of consolidation. Right, how big is a break above this level here for traders? This 34.80-ish.
Yeah, it's huge. Yeah, it's a massive. Well, that changes so many things. It changes a trend from a negative to a positive, gives you the lightning bolt that you need, and really, it's got very firm set targets. I mean, the previous highs are very logical targets for it. So. Yeah, and it's going to break that trend line, of course. So break moving averages, break a trend line, give you a higher low sequence on a daily chart. A lot of very positive things in that image right there. You see that? And that could lead to some nice moves. And I think that, like I said, predetermined targets are always good. I love going into markets where there's already a target to aim for. All-time highs don't excite me as much as these opportunities, because the already known ground that you're trying to get to is a lot easier to break than all-time high breaks, and I think that makes trading a lot easier. So we've got a question here from Willem. What do either of us think about the official Trump meme coin? I'd probably put that in the same basket as the Haktung Girls coin, personally.
Oh, all right. So I think people. Oh my goodness. So I would say with the Trump coin, look, it's like any of these alt kind of meme things. You've got to see it for what it is, which is it's a pump and usually a bit of a dump, and it's already taken a big hit. Look, if you get into it early before the next pump, it's kind of like a GameStop. It can go up a lot quickly, and then usually it crashes. Know what you're getting into. Obviously very risky, so you have to assess it from that situation. I did hear that Kyle Sanderland somehow made $700,000 in about 24 hours, Ty. But he didn't take it out, so now it's not worth, it's probably worth $80,000. He's bragging about it the other day on TV. or the radio or something. I can't remember what I saw it. Okay, we got here from Willem says, oh, that was the question about Trump coin. Andrew says here, can you check out the BHP chart? Okay, sure. So BHP is on the American market, also on the Australian market, and it's a big iron ore / mining company. Obviously changes to the upward trend. Not great that it keeps dojing each day, but when you're looking at BHP, your main interest is also looking at iron ore. So you want to look at your iron ore futures. You also want to ask yourself, has it broken through trend lines? So I would say BHP hasn't broken the same way, but if you look at like an FMG or a Rio, and an iron ore price, you'll see that it has. So we're probably getting close to an area of interest, like somewhere around 39.50. Next chart, unless you have something quickly to say on that one, Ty, we'll just go because we've got a couple of questions coming here. Calvin says, what about copper?
Yep, it leads into copper, actually. I was just going to say the BHP reported a 17% rise in copper, actually, in December. So it actually leads on to the copper discussion.
Okay. Well, copper, new higher high. I think it's changed trend down here, frankly, towards upside. Started seeing strength. MACD, of course, also going positive for the first time. I think it's a promising sign. The metals are generally bullish at this stage. Obviously, gold's one thing, but that's different to an iron ore or a copper. So if you want to, after this stream, go and have a look at iron ore, you'll see what I mean. Somebody's asking for LTC. I assume you're saying Litecoin. So Litecoin, for anyone that doesn't know, one of the OG coins, often considered the kind of more transactional crypto against Bitcoin. But look, again, like any of the cryptos, they're all taking a bit of a breather in this altcoin market. This one went up quite a lot to get to this $117. And I would say all of these look like they've kind of found semi-base. You can see that series of lower highs getting taken out. That just means that these are usually where buyers are. So somewhere I would probably run the thing through. I'd say 101 is probably the low on this for now. What are your thoughts?
Yeah, I think probably it's in the middle of that range that I wouldn't get excited about it until it's above 140 or below 100, actually. Yeah. Any trading below that or above that, I think that it could be on for a little bit of a mini trend. But aside from that, I'd be sticking to trading inside those two boundaries.
Yes. Yeah. So we'll stick within the boundaries. Just another mention about the Trump thing breaking 100 odd. Yeah. Look, I mean, it's like anything. They get pumps. This is back onto the Trump coin. They get pumps, they get dumps, but you must know what you're going into. Some people, the problem with this is everyone has this idea that, I'll sell it before anybody else does. And there's an old adage that fear and greed. Remember, be greedy when others are fearful, and fearful when others are greedy. From Warren Buffett. It really means more than just you think. It's because most of the time as humans, we always think we can get out before everyone else. But what ends up happening is you hear this story of someone that did, but then predominantly people are just like, just a little bit more. I know it could go bad anytime, but just a little bit more. Oh, it's up another 20. I'm so glad I held. And then that feeds upon itself and you end up making big mistakes. Know what you're in.
Absolutely. They're generally the same people who have a mental stop loss that they'll take out when it eventually gets there.
Oh, mental stop loss. Yeah, that can ruin your account. Yeah, don't do that. All right, let's leave it with this then for the week. Don't do mental stop losses. That's a bad idea. Actually have hard, fast rules in 2025. And it's something I've done the mistake. I'm sure Ty has as well. We all did it.
Absolutely, we all have at the start.
I'm lucky I haven't done it for a long time ago, so that's good. But yeah, mental stop loss is bad. Remember, look, in our opinion, 2025 is about recognizing storylines in the market, no emotion, being able to break down the markets in a really good way so that you see both sides, but you find the one that's stronger, find the edge. If you enjoyed today's show, then please make sure to click the links in the description down below, sign up for our weekly events that we do. And I guess we can make a little bit of an announcement. If you are in Perth or in Brisbane, then we will be coming up. So mark your dates in. We'll have, I think it's the
coming your way in about 4 weeks, I reckon.
Yeah, so we're going to make those out. So if you're interested in coming to the events, 25th in Brisbane in the evening, probably about 6-ish, and I'll set the times, and then 26th in Perth. So if you're around and you're interested in finding out our thoughts for 2025 and beyond, and also going through a couple of little tasty tips, then definitely come and say hello. Thank you so much, guys.
Love to see you there.
We would love to see you there. Absolutely. Have a great one. We'll see you later. Bye for now.
Thanks, everyone. Bye.